Taken page number 24?
Yes, I do.
Yeah. Sachin, good evening, dear.
Good evening, ma'am.
Take page number 24, 24.
Yes, ma'am.
Yeah. Today we are going to learn IFR, Investment Fluctuation Reserve. Okay. Start writing. Okay. A and B are the two old partners and their old ratio is given 3:2. So in 3:2 ratio, old partners are sharing their profit or losses in the business. Suppose IFR is given, don't write IFR, you have to write the full form, Investment Fluctuation Fund. And the total amount given is 50,000. Now why the business is maintaining this fund? Because sometime what happens, business purchases investment like shares or debentures of some other companies. Okay, business, they invest their money in some other company, so sometime they get good amount of profit in the investment. Sometime what happens, the whatever amount they have invested, they may have to suffer losses in that investment. So whenever business does any investment, simultaneously business maintains investment fluctuation fund. What is that fund? Out of the profit, business keeps some amount separately for investment fluctuation fund, and it is shown in the liability side of the balance sheet. Now what will happen? Suppose there is any loss in investment, and investment is an asset for any business. Investment is always shown in the asset side of the balance sheet. Investment fluctuation fund, that is IFR, is shown in the liability side of the balance sheet. Any loss which arises in investment is always adjusted or compensated out of this investment fluctuation fund, or you can call it as reserve also. Both means the same. So please kindly write it down, all these as important notes. Investment is shown in asset side of the balance sheet, write it down. IFR is shown in liability side of the balance sheet, and write it down. Whenever there is any loss or decrease in the value of investment, that loss is compensated from this IFR. You have to write so that it becomes easy for you to understand what is all these. Are you writing?
Yes, ma'am.
Yeah, fine. So now suppose this is an example. In your question also like this they will give. So A and B old partner, their old ratio 3:2. IFR, investment fluctuation reserve, it will be shown in the liability side of the balance sheet, 50,000. Investment, as I told you, it is an asset and it will be shown in the asset side of the balance sheet, 5 lakh. Now there are different cases. Any one case they may give you in your exam or in your book questions in adjustment. What is the first case? If market value of investment is 5 lakh, means in adjustment they will say market value of investment is 5 lakh or value of the investment is 5 lakh or whatever. Meaning is now the present value of the investment is 5 lakh. And what is shown in our this balance sheet, investment is shown 5 lakh only. Now and no other information is given. Okay, like nothing is given, it means there is no change in the value of investment. What do you understand? Suppose in asset side of the balance sheet 5 lakh investment is shown, and in question in adjustment they have given that market value of investment is 5 lakh, means there is no change, no increase, no decrease in the value of investment. Then what you will do for this investment fluctuation reserve? You have to distribute among the old partner. Write it down clearly. Again, new partner has nothing to do with this, because these are IFR is created by the old partners out of their profit. New partner doesn't have any share. Kindly write it down. Many times students get confused. If you distribute in new ratio, question will go wrong. Kindly write it down. Always IFR, general reserve, workmen compensation reserve, everything should be distributed in old ratio among old partner, because these are created out of the profit which the old partner have earned before the new partner joins into the business. That is the reason new partner has no rights in this profit. Are you getting my point?
Yes, ma'am.
Yeah. So
Yes,
what will be the journal entry? Write the journal entry: investment fluctuation reserve account debit. What, how much reserve is created? 50,000. And you have, why you are debiting this? Everything has a logic. Like this we are not doing anything in accounts. If you are debiting this, what I said, it is a liability. Why it is a liability IFR? Because who has the right? Old partner, they have the right, because they created out of their profit. So if there is no loss in investment, they will get this. So firm needs to pay to the old partner in case there is no loss in investment. So it is shown in the liability. Now you are going to close the liability. Whenever any liability you have to close, you have to debit the account. That is the reason you are debiting IFR 50,000. And whose capital account you will credit? Old partner. Why you are crediting? Firm will give this 50,000 to old partner in old ratio. And what is the rule in our partnership? Whenever the firm wants to give anything to partners, partners capital account should be credited. As per the rule only we are doing. That is the reason IFR account debit 50,000 to old partners capital account 50,000. You can write to A's capital account to B's capital account. 3:2. This 50,000 will be distributed among A and B in 3:2. 50,000 multiplied by 3 by 5, A will get. 50,000 into 2 by 5, B will get. Any doubt in the first case? Swarnika, Pavitra, Sachin, it is clear to all? Okay.
yes, ma'am.
Okay, try to understand the logic, why we are debiting, why we are crediting, why this is happening, then it becomes easy for you. Now the second case we are moving. If market value of investment is rupees 4,80,000, suppose in adjustment they are saying in your question that now the market value of the investment is 4,80,000. In asset side of the balance sheet, investment is given 5 lakh. So what you understand by reading the question? That there is decrease in the value of the investment by how much? 20,000. So this 20,000 loss, from where you will adjust? You have already created IFR in the liability side of the balance sheet, investment fluctuation reserve. Why you have created? To compensate the loss arising in investment. Now you have to adjust through this only. How to do? Always like WCR, what you used to do? Always whatever amount given in the liability side, WCR, you have to debit. You are closing the account. In the same way, IFR also, whatever amount given in the liability side, first you have to close it. So you have to debit the account with the amount. IFR account debit 50,000. It is 50,000. Close the account. Now 50,000 already you have created to compensate the loss. Loss is 20,000. So from this 50,000 you can compensate 20,000 loss. So to investment. Why you are writing to investment here? Investment is an asset. Value of the asset is decreasing. Rule of debit and credit. Whenever any asset increases, you have to debit the account. Whenever any asset decreases, you have to credit the account. This is the rule of debit and credit. So those who don't know, kindly write it down, these rules. That's the reason you are crediting here to investment 20,000. By how much the value of the investment is decreasing? By 20,000. How? Because in balance sheet asset side value is given 5 lakh. But in adjustment, now the present value or market value is 4,80,000. By this, we come to know value by 20,000 has decreased. And still there is some amount left in our reserve. How much? 30,000. Out of 50, 20,000 loss we compensated. What about the remaining 30,000 in reserve? That should be distributed among old partner, old ratio. Repeatedly I am telling, write it down clearly, don't get confused. Lot of ratios are there, na? That's why new ratio, sacrificing ratio, old ratio. So which ratio you should use is a rule. You have to follow that rule. You can't change. So write it down clearly. Whenever any reserves or any losses, anything is distributed among partner, always old ratio is used and it is distributed among old partner. Sacrificing ratio is always used only one time, whenever the new partner brings the goodwill, and that goodwill distributed among old partner, only one time. Okay, is it clear?
Yes, ma'am.
Yeah, fine. Okay. Now we are moving to the third case, case 3. MV means market value. If market value of investment is 4,50,000, then what you will do? In your question adjustment, the question tells you market value is 4,50,000. So in balance sheet asset side, investment is shown 5 lakh. Now the market value is 4,50,000. So by how much the value of the investment has decreased? 50,000. So 50,000 is the loss for the company or the business. That loss should be adjusted from the reserve created, and reserve is created for 50,000. So IFR account debit, that is investment. You don't write IFR, you have to write investment fluctuation reserve. Don't use short form. IFR account debit 50,000 to again investment you will credit because value of the asset is decreasing 50,000. If you see the third case, nothing is left for partners to be distributed. 50,000 is created reserve, 50,000 is the loss in investment. So out of that 50,000 reserve, 50,000 the loss of investment is compensated. Nothing is left for the partners. I hope third case is also clear. Swarnika, Pavitra, Sachin.
Yes, ma'am.
Okay, if any doubt ask me dear, no hesitation please. Now we are moving to the fourth case. If market value of investment is 4,20,000. Now what is the market value of investment? 4,20,000. And what is the value of investment shown in balance sheet? 5 lakh. And how much there is a loss? 80,000. Because 5 lakh we are showing in asset side of the balance sheet. Now the value has reduced. It has come to 4,20,000 means 80,000 has been reduced. This is the loss for the business. Now this loss should be compensated from the reserve created IFR. But if you see, reserve is also only 50,000. So loss is 80,000. Reserve created is 50,000. So 50,000 loss you can adjust from that reserve 50,000. What about the remaining 30,000 loss? That will go in the revaluation account. So revaluation account is an account which we prepare during admission, retirement and death also, in order to revalue assets and liability of the business before the new partner comes. So any loss arising during revaluation of any asset or liability will go in the debit side of revaluation account. Any profit arising in the value of assets during revaluation, it will go in the credit side. So revaluation account is basically a nominal account, and the rule for nominal account is any expense loss you have to debit the account. Any profit, any gain in the business, you have to credit the account. So revaluation account works like that. Clear? Somewhat it's clear to you?
Yes, ma'am.
Yeah. So IFR as usual, first you have to debit 50,000, then revaluation 30, then to investment 80. There is loss of 80,000. Now there is nothing again left for the partners to distribute. Already the business is in loss only for investment, but this revaluation account loss 30,000 will be beared by the old partner old ratio. This loss of 30,000 which we have shown in the revaluation account debit side, who will bear this loss? Partner will bear this loss. So whenever partner bears any loss of the business, capital account should be debited as per the rule. So old partner capital account debit, A and B old partner means how you will write? A's capital account debit, B's capital account debit in their old ratio 3:2. So this 30,000 loss should be beared by A and B in 3:2. 30,000 multiplied by 3 by 5, A will bear. 30,000 multiplied by 2 by 5, B will bear. In this way, A and B will pay the loss to the business. This 30,000. To revaluation account 30,000. Now the revaluation is also closed. Revaluation account crediting means now it is closed. Any doubt in this fourth case?
No, ma'am.
Okay. Yes, Pavitra, Swarnika. Okay, fine dear. Now we are moving to fifth case. If market value of investment is 5,50,000, investment value shown in our asset side of balance sheet is 5 lakh. But now market value has increased to 5,50,000. This 50,000 is profit for the business. Now what to do? When the value of the investment is increased, it is profit. Now there is no use of IFR created because always these reserves are created to meet the losses. Here there is profit in investment, value has increased. No use of this 50,000. Then entire 50,000 will be distributed among old partner, old ratio. Now IFR account debit, investment fluctuation reserve account debit 50,000 to A's capital account to B's capital account. 50,000 multiplied by 3 by 5, 50,000 multiplied by 2 by 5. That's all. And this 50,000 increase in the value of investment is a profit. Any profit on revaluation of asset and liability should be shown in the credit side of revaluation account. So revaluation account should be credited and value of the investment is increased, asset is increased. Whenever asset increases, you have to debit asset account. So investment account debit 50,000 to revaluation account 50,000. Now this profit, who will enjoy? Old partner, old ratio. If there is any loss in investment, old partner are paying that loss to the business. Same way, if any profit in the value of investment or any asset, that will also be enjoyed by the old partner only. So if the firm needs to pay this 50,000 profit in investment to the partners, old partner capital account should be credited. As we know, anything business needs to pay to partner, partner capital account will be credited. Now revaluation account debit 50,000 to old partner capital account 50. Old partner means 2 A's capital, 2 B's capital, 3:2 old ratio. You will distribute this 50,000. Any doubt in all, anywhere you are facing any doubt? Till case 5th I taught. Any doubt you people are having? Anyone?
No.
Okay. Yes, Pavitra, Swarnika. Oh. Okay. Swarnika, you are having doubt? Yes, Swarnika, you are having any doubt, dear? Your voice is breaking, dear. I think network issue. Voice is not clear. Yeah, okay, dear. Okay. So now comprehension questions. Okay. It is very important. 6 marks question comes in your exam. Now first we are going to learn the revaluation account. Format of revaluation account. Debit, credit. Whenever we say account, there will be always two sides. Debit, credit. particular rupees, particular rupees. So prepare the format of revaluation account. So whenever there is any loss in the revaluation of assets and liabilities, okay, you have to write that amount of loss in the debit side of revaluation account. For example, in the balance sheet, suppose land and building is given 5 lakh rupees in your question, asset side. Land and building is asset, and in the adjustment they are saying land and building has become 5,50,000. So 50,000 is the profit. It is increase in the value of asset, that is profit. So you will show in the credit side of revaluation account. Okay. Suppose there is a liability creditor. For example, creditor is a liability and it is shown in the liability side of the balance sheet 50,000. For example, now in the adjustment they are saying creditors return back 10,000. Return back, you have to understand some terms. Return back means now this 10,000 payment to creditors firm will not make, because creditors, like due to some reason, any reason there will be, but there is decrease in the creditors, in the value of creditor. Creditor is a liability, and if there is any decrease in liability, it's a profit na. You have to pay 10,000 less to the creditors. So that's a profit, 10,000 in the revaluation of liability. Any profit you have to credit revaluation account. So in the credit side you have to show it. In the same way, suppose there is any loss in the value of asset. For example, furniture, it is an asset. In the balance sheet, furniture is shown 10,000. For example, now in the adjustment it is given, now the furniture has become to 8,000. So that 2,000, it is decrease in the value of asset. Furniture is an asset. That's a loss. That will come in the debit side of revaluation account, because there is decrease in the value of asset. Revaluation account is always prepared to revalue the assets and liabilities at the time of admission of a new partner. Are you understanding, dear, the concept of revaluation account? Yeah. Okay. Now, in the debit side, what you will write? Two assets, decrease in value. Decrease in value of any asset is a loss. So, that will come in the debit side. Two liabilities, bracket, increase. If any liability is increased, for example, the question says you that you have to create provision for bad and doubtful debts 10,000. Provision for bad and doubtful debts is a liability for the business. So there is increase in the liability, that's a loss for the business, you have to show in the debit side. And in the credit side, suppose as I told you, land and building has appreciated, means their value has increased by 50,000, that's profit, you have to show in the credit side. By liability decrease, as I told you, creditors return of 10,000, decrease in liability, that is profit for the business, you have to show in the credit side of revaluation account. So basically assets, liability. If asset increases, value of the asset increases, you have to show in the credit side of revaluation account, because it's a profit. If the value of asset decreases, it's a loss, you have to show in the debit side of revaluation account. If any liability increases, again it's a loss, you have to show in the debit side of revaluation account. If liability decreases, you have to show in the credit side of revaluation account, it's a profit. After doing all these, you have to make sum total of debit side and credit side. Suppose credit side is more than debit side, then revaluation profit you will write in the debit side to profit. Old partner, old ratio, again new partner has nothing to do. Revaluation account profit or loss always shared among old partner, old ratio. New partner has nothing to do in revaluation profit or loss. Write it down, each and everything, whatever I am telling you, and revise it, and please kindly practice the sum from your book. I don't know whether you people are practicing or not. You all are writing the notes during the class. You all are very sincere. You are sending me everything. I appreciate. But what about the practice? I don't know. Whatever book you are having, until and unless you practice yourself, you won't get good marks. I'm telling you. So you have to practice at home. Actually, in your school, lot of tests, lot of exam they will conduct. I don't want to put any pressure on you people. That's why I am not like keeping any test for you people, because even if I start keeping, it will be really very pressure. But it doesn't mean that you won't practice. I hope you people are practicing at home, right?
Yes, ma'am.
Yes, ma'am.
Yeah. Okay. Okay, fine. So suppose debit side is more than the credit side, then what will happen? See, debit side is a loss. So if debit side is more, means there is loss on revaluation of assets and liabilities. Again, that loss should be borne by old partner, old ratio. Write it down, old partner, old ratio. So you have to write in the credit side, by loss transferred to partner's capital account. A and B old partner, right? A is capital, B is capital, whatever old ratio given. Suppose 3:2, distribute the loss in that ratio. In this way you have to prepare revaluation account. Now partner's capital account. Shall we move to partner's capital account? Till here you wrote, everyone?
Yes, ma'am.
Okay. Just a moment. Okay. Steps to be followed for question. Whenever you are preparing any, like if the question tells you to prepare partner's capital account, there are some steps which you have to follow. What is the first step? One balance sheet will be given in your question. Asset side, liability side, all the items will be given. Below balance sheet, few adjustment will be given. So first you have to see the capital balances, which you will find in the liability side of the balance sheet, because capital is a liability. Firm needs to pay the capital at the time of closing the business to the partners. It's a liability. So when you prepare partners capital account, you have to write the capital balances in the credit side of partners capital account by balance BD. Whatever given in your balance sheet. Old partner, again old partners capital balances will come. New partners balance will not come there. It is the balance sheet prepared before the new partner joins into the business. So old balance sheet, old partners accounts will be there. Now distribute, suppose first whenever you do the big question, first you have to always see in the liability side of the balance sheet given in your question whether any distributable items are there. What are the distributable items? For example, general reserve. If you find any general reserve given in the liability side of the balance sheet, immediately what you have to do? You have to transfer it in the capital account. How to transfer? Partner's capital account, you will write in the credit side by general reserve. Old partner, old ratio, distributed. Understood? Yes? Are you understanding?
Yes.
Okay, fine. Now suppose any PL balance is given in the liability side. First you have to understand, if any profit or loss account is given in the liability side of the balance sheet, it means profit. It shows profit. Any credit balance of PL account means it's profit. And you know profit, who are the owners? Old partner, old ratio. Again it will come in the credit side of partner's capital account. You will write by PL account, and whatever profit is given in the liability side of the balance sheet, share it in old ratio. That's it. Suppose now like if workmen compensation fund, investment, fluctuation reserve, I have taught you the different cases. Accordingly you will do those things. Now suppose come back to our asset side of the balance sheet. Sometime advertisement expense will be given, advertisement suspense account. deferred revenue expenditure or PL account. Now what is this? PL account shown in the asset side of the balance sheet means loss for the business. You have to understand. PL account debit balance or PL account shown in the asset side of the balance sheet, both means the same. It is a loss. Now loss, why they are showing in the asset side? Because business will get this amount from the partners. Partner will pay the loss to the business. So it is asset for the business, loss for the partner. Now this loss will be shared among the old partner, old ratio. Now the same concept. If partner needs to pay anything to the business, partner's capital account will be debited. So partner's capital account debit side you have to write to PL account. Suppose two partner A and B. Suppose loss is 1 lakh. Distribute that loss in 3:2 old ratio. That's it. Suppose any goodwill is there in the balance sheet asset side. Whatever I am saying, kindly write it down. Suppose any goodwill that is known as existing goodwill or appeared goodwill in the balance sheet already, that is there in the balance sheet, that goodwill, that you have to write it off. How to write it off? What is the journal entry for writing off the goodwill shown in the asset side of the balance sheet? Old partners capital account debit to goodwill account. A and B old partner, so A's capital account debit, B's capital account debit to goodwill, suppose 50,000 for example. That 50,000 you will distribute in 3:2 ratio. 3 by 5, 2 by 5 in that ratio. Again where it will come? It will come in the debit side of the partner's capital account. What you will write there? To goodwill, and A's, B's amount column you have to distribute that goodwill, whatever amount you have to write it off. Till here any doubt anyone is having? Okay. When you start doing the question, then only you will have doubts. So start doing it, then you will face some problem, you will stuck anywhere, ask me in WhatsApp, I will reply. Whenever you are having any doubt, suppose you are solving during 10 o'clock, 11 o'clock, it's up to you. Accounts you are solving sums. Whatever chapter I have taught you so far, you are not able to do it, you are stuck somewhere. No hesitation. Send me the question in WhatsApp. Whatever your doubt, which point you are not understanding, send me that. Whenever I am free, I will see and I will reply to that. No hesitation. That's why I am telling repeatedly. Whenever you are doing the sum and you are struggling, you are not able to solve it, I am there to help you out. Send me in WhatsApp. Whatever your doubt, send me the question along with your doubts. I will reply whenever I am seeing and whenever I am free. Okay?
Sure.
Yeah, fine. Hope
Yes.
till here you all have written yes. 3 of you wrote till here.
Yes.
Yes, ma'am.
Okay.
Very good.
Okay. Now, next. Adjustment, goodwill, revaluation and capital adjustment. We have to learn all these things. Closure of revaluation account and capital account and finalize balance sheet. Okay. First, we will see the question, comprehensive question. This comes for 6 marks, sometime for 8 marks also this question comes. It's a big question. So balance sheet of Raman and Aman as on 31st March 2019. There are two partners, Raman, Aman. Their balance sheet is given 31st March 2019. This is the question. Liability, provision for bad debt 7,000. Outstanding expenses 18,000. Bills payable 47,000. Sundry creditors 1,02,000. Workmen compensation reserve 55,000. Capital of old partner Raman, Aman. Raman 3 lakh, Aman 1,50,000. Capital of both the partners 4,50,000. Now, if you come to the asset side, bank 24,000, bills receivable 80,000, sundry debtors 95,000, stock 14,000, furniture 70,000, machinery 2 lakh, land and building 1,96,000. Both the sides 6,79,000, 6,79,000. This is the balance sheet. Now, on the above date, Suman was admitted as a new partner. Suman is a new partner. She is joining the business. For how much share? 1/5 share in the profit. She is coming for 1/5 share on the following conditions. Now, what are the conditions? Suman will bring 2 lakh as her capital. She is bringing capital 2 lakh rupees and necessary amount for her share of goodwill premium. Question is telling you clearly Suman will bring two things. She is the new partner. She will bring along with her capital 2 lakh and necessary amount of goodwill. So now you have to calculate the goodwill of Suman. The goodwill of the firm on Suman's admission. See, firm's goodwill is given, which includes goodwill of Raman, Aman and Suman. All these together, goodwill is given 1 lakh. That is, goodwill of the firm is given. But we want only goodwill of Suman. So you have to calculate. Very easy. Calculation of goodwill of Suman, how you will do? Total firm's goodwill 1 lakh multiplied by Suman's share 1/5. You will get. So proper working notes is required. So all these you have to show in working notes properly. Now, what is the second thing? Our OS means outstanding expenses. Outstanding expenses will be paid off. So, what is outstanding expenses? It's a liability. Some expenses of the business has become due, but business didn't make payment yet. That is why those expenses is known as liability 18,000. Now, business is making payment. If you are good in journal entry, you can solve. See, what will be the journal entry if the outstanding expenses are paid off? Outstanding expense is a liability. When you are making payment of any liability, liability is decreasing. When the liability decreases, you have to debit the liability account. So, outstanding expenses account will be debited by 18,000. And you are making the payment. So, cash is going outside the business. To cash 18,000. This will not come in your revaluation account. What is the concept for revaluation account? If there is any increase or decrease in the value of liability or assets, then only profit or loss you have to record. If you see this, it's a simple outstanding expense which business needs to make the payment. The same amount 18,000 business is paying. So it has nothing to do with revaluation account. Suppose the question tells you outstanding expenses are paid 1,000 less. For example, it means what? Outstanding expenses are 18,000. But it is paid less 1,000 means only 17,000 is paid. So you have to understand 1,000 is the profit. Business is paying less 1,000. Liability means it's a profit. Decrease in the value of liability. That you can show in the credit side of revaluation account by outstanding expense 1,000. That's a profit. In this question, they are not saying anything like that. Just they are saying outstanding expenses paid. So you can write the journal entry for your understanding. So outstanding expenses account debit to cash. In revaluation account, we have nothing to do with this. Are you understanding what I want to say?
Yes.
Okay, write it down the journal entry also, dear, so that you don't get confused why this has not come in revaluation account when you revise. So write it down everything, whatever I am saying. Okay, now rupees 5,000 will be written off as bad debts. Okay, so 5,000 will be written off as bad debts. Now what is bad debts? Suppose there is a debtor. Who is debtor? He is a person to whom business has sold goods on credit. Now debtor is asset for any business. Why? Debtor will make payment in future. So business will get benefit from debtor. Now bad debts means suppose whatever debtor, like in our question sundry debtor is how much? 95,000. Out of this 95,000, 5,000 debtor will not make the payment has become bad debts. They are not going to make any payment to our business. So this 5,000 is a loss. Asset is decreasing, na? There is decrease in the value of asset. Sundry debtor is asset and value of it is 95,000. But the question tells you that there are 5,000 bad debts, means we are going to get less now. Only 90,000 we can expect. 5,000 we are not going to get. It's a loss. Decrease in the value of asset, loss. This you can show where? In the debit side of revaluation account. And a provision of 5% for bad debts on debtor was to be maintained. Now what the question tells you? You should maintain a provision. What is this provision? See what happens. Every business on regular basis, every year whenever they earn profit end of the financial year, they keep some amount separately out of the profit for as provision they create. Why they create? Because they know business sell goods on business sells goods on credit to some customers, and there is no guarantee that in future all the customer to whom business has sold goods on credit will make the payment. Usually some of the customer, due to some reason, they may not be able to make the payment. Business have to suffer some losses. Due to that, every year business creates provision so that in future if any bad debt arises, that should be adjusted or compensated from this provision. Provision for bad and doubtful debts is always created to compensate the loss arising due to bad debts. Are you getting this point clear? What is bad debt? What is provision? Yes?
Yes.
Okay. Now what is the important thing? See, whenever bad debts is given in adjustment, these points are adjustment only. Outside the balance sheet, whatever point you are studying, those are known as adjustment. Those always goes in two places. First thing, in 11th also you must have studied final accounts with adjustment, without adjustment. So with adjustment, whatever points given in adjustment, always it goes in two places. The same here also. Whatever given outside the balance sheet, all goes in two places. This bad debts, as I told you, first it will go in the revaluation account debit side. Second, you have to subtract from sundry debtors. Okay, you write it down as very important note. Whenever in adjustment bad debts are given, first listen what I am saying, then write. Whenever in adjustment, now what is adjustment? I told these are the adjustment given outside the balance sheet. Bad debts is given and the question asks you to create provision. What you have to do? First, from debtors you have to subtract the bad debts. Here sundry debtors 95,000. First you have to subtract bad debts 5,000. Then now the good debtors are 90,000. 90,000 you have to create 5% provision. Many students, they don't do, they directly create provision on 95,000. Question will go wrong. So this is the rule. Always first, if bad debts, write it down kindly. If bad debts is given in adjustment and the question asks you to create provision for bad and doubtful debts, what you have to do? First, you have to subtract bad debts from sundry debtors. Then whatever amount comes, sundry debtor amount, then you have to create provision on that. So first write calculation of provision on sundry debtors. In working note start writing. Then write sundry debtors equals to 95,000. Subtract less, you can write bad debts 5,000. Then the good debtors comes 90,000. Then you create provision. How much the question tells you? 5%. On 90,000 you have to create 5% provision. That is only provision for bad and doubtful debts. Do it as working notes, part of working notes, calculations and all. See, I have already given, I think. I have given in page number 30 the working notes. Now one more important thing is there in this question. Before, just stop now, don't write. See, if you see one thing in this question, normally if you see now what will happen, from sundry debtor they will subtract provision for bad debts, then they will show in the asset side. But in this question they have shown provision for bad debts. I am talking about the balance sheet. In the liability side of the balance sheet, 7,000. Okay. So what you have to do, this is the old provision. This provision for bad debt 7,000 is the old provision. We call it as old provision. And whatever in adjustment they are asking you to create, it is the new provision. So first, as I told you, 95,000 minus bad debts, it comes 90,000. Then you create 5% provision on that. When you create 5% provision on 90,000, how much amount you will get? The new provision 4,500. This 4,500 is the new provision. First you have to understand, whatever you have created now, it is known as new provision, and old provision is given 7,000. Are you understanding what I want to say?
Yes, ma'am.
Okay.
Yes.
Now see, first whenever any bad debts happens in the business given in adjustment, what will be the journal entry? Bad debts account debit to debtors account. This is the normal journal entry we pass. So that is 5,000 given in our question. Then what I said, if any bad debts happens and suppose any provision is already created, that is old provision is given in your question, na? 7,000, that is the old provision already business has created. From that old provision, we have to adjust this loss, like IFR, WCR. What do you used to do? Whatever the workers claim, you have to adjust from WCR. Whatever there is loss in investment, you have to adjust from IFR. The same here. Whatever bad debts loss, you have to adjust from provision for bad debts. That's the reason we are creating. So 5,000 you will adjust from this 7,000 already created. So how to pass the journal entry? Provision for doubtful debts 5,000 to bad debts 5,000, means the old provision 7,000, from that you are taking this 5,000 to compensate the loss for bad debts. Till here any doubt anyone is having? Are you understanding why we are doing all these things?
Yes, ma'am.
Yes, sir.
Okay. So just imagine already 7,000 created provision, old provision, and 5,000 bad debts we are adjusting from there. Still in old provision, what amount is left? Still in old provision, what amount is left? 2,000. Out of 7, 5,000 you are utilizing for this bad debts. So still 2,000 is there in the old provision. Now the question asks you to create a new provision 5%. You have created, it comes to 4,500. It means what? Whenever the question tells you to create provision and already there is any balance in the old provision, you have to understand whatever the new provision comes, you have to show that in balance sheet. What is the meaning of this? In new balance sheet, after the new partners entering into the firm, when you prepare the new balance sheet and when you come in the asset side of the balance sheet, you will write sundry debtors, then you will subtract bad debts, then you will subtract the new provision, everything. So new provision when you will subtract, now you will subtract 4,500, means total provision to be created now is 4,500. So just imagine already 2000 balance is there in the old provision. Question tells you to create provision 4500. When already 2000 is there, more how much you have to create provision? Only 2500 more you will create, so that it becomes 4500. So new provision, like more you are making, or it's a, you can say it's a kind of loss which you have to show in the revaluation account. How much you will show? 2000. When you prepare the revaluation account, so to provision for doubtful debts will be how much? 2500. How 2500? 4500 you have to create new provision. Already 2000 is there in the old provision balance, so more 2500 you will create. And bad debts you will not show here. Why you will not show here in the revaluation account? Why you are not going to show? Because that bad debts you already adjusted from the old provision. 7000 already it got adjusted there. Are you understanding?
Yes, ma'am.
Try to understand, try to write it down, all these points. Kindly write it down whatever I am saying. It will help you a lot, because major time what happens is students get confused in this provision also they struck. So the rule is, whenever old provision is there in your question, whatever the new bad debts given in adjustment happens, first you have to adjust that bad debts from the old provision. Then if any old provision balance is left and the question asks you to create new provision, then from the sundry debtors, if bad debts is given in adjustment, you will subtract. Then whatever amount comes, you will create the new provision. Like I am talking about our question only. New provision has come 4500 and already there is balance of 2000 in the old provision. So now more how much you have to create the provision? 2500. That 2500 only will go in the debit side of revaluation account as a loss. More liability is increasing 2500, but when you prepare new balance sheet, you have to subtract from debtors 4500. Are you understanding?
Yes, ma'am.
Yeah. Are you writing everything whatever I am saying, all the three?
Yes, ma'am.
Okay. Okay, dear. Okay, dear. It's for your benefit only. Fine. Okay. So this adjustment also done. Now, what is the third adjustment? Liability towards workmen compensation was estimated towards 60,000. So come back to balance sheet liability side. Workmen compensation reserve, how much given? 55,000 it is given. And how much the claim? 60,000. So claim is more than the reserve created. So how much more? That is the loss for the business, 5,000 more, that you have to show in the revaluation account debit side. Because liability is increasing, there is a loss. To workmen compensation reserve, 5,000 will come in the debit side of revaluation account. So simultaneously in one page you can prepare all the working notes, all journal entry, everything, and in one page revaluation account, partners capital account, balance sheet, all we are going to learn. So prepare the format and solve it. In revaluation account, already two items I told. In the debit side, to provision for doubtful debts, 2500 will come. Then now to workmen compensation reserve, 5000 will come. Are you understanding why we are writing only 5000 workmen compensation reserve debit side of revaluation account?
Yes, ma'am.
Okay.
Yes, ma'am.
Okay, fine. Now, fourth adjustment, machinery was to be depreciated by 18,000. What is the meaning of this? There is a depreciation, there is a loss, or you can say decrease in the value of machinery, and machinery is an asset for any business, by 18,000. 18,000 is the loss basically. If there is any decrease in the value of asset, it's a loss, and you have to write on the debit side of revaluation account. So in the debit side of revaluation account, what you will write? To machinery, because machinery value is decreasing by 18,000, write 18,000. Understood?
Yes, ma'am.
Yeah.
Yes, ma'am.
Okay. Now land and building was to be depreciated by 54,000. So land and building is also getting depreciated. There is a loss or decrease in the value of land and building by how much? 54,000. This is a loss. There is decrease in the value of asset, loss. So again you have to come to revaluation account. In the debit side you will write to land and building 54,000 and nothing else will go in the revaluation account. You can just close the revaluation account, and if you see there is only loss, no income. In this question there is no income. So you have to do the totaling. This is homework, you do just now itself. Do the debit side total in revaluation account, see what is coming. That will come 79,500. It will come in the debit side. That's a loss because credit side no income, only loss. That loss will be beared by the old partner old ratio. Who are the old partner? Raman, Aman. So their ratio is given, profit sharing ratio. If you read the question, it is not given. And what is the rule for partnership? Whenever ratio, profit sharing ratio is not given in your question, they are equal partners. That is the rule. So here profit sharing ratio not given. So 1:1 is the ratio for profit sharing. So they are equal partners. 39,750, 39,750. Any doubt dear? So far you are having any doubt? Anyone?
No, ma'am.
No, ma'am.
Okay, so this debtors concept is clear. Provision, bad debt, very important concept. It is clear to you?
Yes, ma'am.
Yes, ma'am.
Okay, so till here today we will keep. This question needs, like in this question they are asking you to prepare journal entry. See, in admission they will ask you to pass, in this question, pass necessary journal entry. They may ask you to pass necessary journal entry. They may ask you to prepare accounts. Anything they may ask you in boards. So you should know each and everything. You should know how to pass journal entry for the question. You should know how to prepare the accounts. Then only you will be able to solve whatever the question is asking in your exam. So kindly practice all the journal. I will teach you in the next class. We will be continuing. I am not saying we will continue the question, but what I am saying, don't assume anything in boards that okay, maximum time they are asking only accounts, so in our time also they will ask to prepare. No. If you see the last 5 years, 10 years questions, when you will be appearing for your boards, before that you will find sometimes they are asking journal entry, sometimes they are asking accounts, because both are there in your syllabus. So don't leave anything, okay? Never leave anything. Don't assume anything in boards. Go through each and everything, okay? So that whatever comes, you don't panic, you can do it. Are you understanding?
Yes, ma'am.
Yes, ma'am.
Yeah, that's why I'm teaching you the journal entry also. Anything, because maximum they will ask account, but journal entry is there in your syllabus. They can ask, they have the right to ask. So don't leave anything. Okay, fine. That's all for today, dear. In the next class we will continue the question. Okay?
Okay, ma'am.
Yeah. Thank you.
Thank you, ma'am. Bye. Good night.
Bye. Good night. Thank you, dear.